What's up, traders? Let's have a quick look at the EURNZD from a monthly time frame. So from a monthly time frame, what can we see just by using the naked eye? It's very simple that we can see the market had a very strong area of previous resistance in this area over here. So it's quite clear that the market now is starting to break this previous resistance again, and we found resistance again here. So what we can expect from this pair on a monthly and a weekly time frame point of view is, of course, we want to see this pair trading higher, than making a higher high than this high over here. So we would like to see the market now create a higher high. But we also have to take into consideration that there is a very strong area of resistance still on this pair. Plus, what we have on the weekly time frame, it's quite clear that the weekly time frame, as you can see, the market created this lovely W formation over here on the weekly time frame. So what I expect from this pair, and what is my prediction from this pair, is I suspect the market will come back and retest this area first, down to here first, before we can actually get any further push to the upside. So on the weekly time frame, this is what we have looking at. If you go down on the daily time frame, it's pretty clear that the market had created this W formation over here. Okay, normally after a W formation, what will we expect? We expect the market to come back and test the neckline of this W formation and then take this trade to the upside. Of course, we need to wait for all the conditions to be right before we can actually enter into this trade. Now, if you take your Fibonacci from the low over here to this high over here, you can see that the market has not yet retraced back to any of the Fibonacci levels. So what I'm expecting and what my prediction is, the market will now start coming down to the 61.8, which is aligned very nicely with structure. It's a very good structure area over here. Okay, so what I expect is the market now to make a push down to this area. From this area, we'll be looking for the next push to the upside on the daily time frame. So it's always important to be reactive and make sure that you use risk management. But if the market will now break this strong area of resistance that we have over here, then we need to be reactive. If the market will break this area, then we'll be looking for a possible entry for a buy on the correction. So if the market breaks, the market will need to come back down to retest this area again. Then we can take the market to the upside. But we have to always be reactive, and we always have to make sure we use risk management. If you guys enjoyed this analysis and you found it very educational for you, don't forget to hit the like button, leave a comment below. It's a free way of saying thank you and supporting us. We will see you guys in the next